Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me on.
Rick, the markets today look relatively flat, but what's been the overall trend lately and what's going to happen? Of course, everybody wants to know that.
Well, I've been dissing the market since a lot of my subscribers were wet behind the ears. And I guess you could say I'm a perma-bear, but at least I know how to read a chart, and it keeps me on the right side of the market. So as bearish as I want to be, we've got the broad averages just kind of sneaking up on the all-time highs, and of course this comes with a not very encouraging backdrop. We've got some real problems in the U.S. housing and auto sector. Two major trading partners, China and Germany, are virtually imploding. Germany by way of a huge surplus account, trading surplus, and there are just so many things wrong. Retail apparently wasn't as strong over the Christmas holidays as U.S. forecasters predicted, other than at Walmart perhaps. But even there, Walmart made a lot of its Christmas money selling groceries, and I don't see that as a net plus for the economy, since the grocery business is just some of the biggest, smartest players beating each other's brains out trying to make 3 cents on a dollar. So anyway, I hate this market, but as it creeps higher and higher, I'm more and more struck, as everyone else must be, at the possibility that it's going to go for it and hit new all-time highs.
Is that because investors now become so accustomed of dumping money into the stock market that they're just investing out of habit?
Yeah, for sure. I mean, there's the institutional flow of money. These guys make their livings recklessly throwing OPM at stocks. They always get some research arm to write a glowing report that explains why the money is going where it's going. But that doesn't really matter. The whole thing is just, where do we put all this money? And so, if they're not throwing it at the market, where else? What else are they doing? So I'm looking at a chart of the industrial average, and with all the negatives in the economy that I just mentioned, currently trading 25,871, with an all-time high at 26,951. So this is like 2 good weeks of rally, and it could get there. And I'm really having trouble believing it. But when you look at a chart, it's not a belief system. It's just, it is what it is, and I still can't believe it.
Well, the Toronto Stock Exchange now has passed the point it was in October last year, so it's been recovering as well. Now, is this a true recovery in the markets? Was there enough of a correction that there's new life?
Well, what is a true recovery?
Yeah.
You know, one way you could interpret that is a false recovery that's somehow convincing. And in that respect, yeah, I guess we've got a true recovery. It's just amazing to me that it could happen. But it is, I guess we're in a broad stretch of bullishness here. And even though things came down pretty hard in October, November, December, the rally from the Christmas Eve low has been almost as steep. So I hesitate to say it's the real deal. And even if we did go to new record highs, I'd be salivating at the prospect of getting short at what would probably be the the bull trap of the decade, bull trap of a lifetime. But you got to be prepared for it.
Now, Amazon used to be your big bellwether stock. Caterpillar also in there now?
I'm absolutely awed at how the sleazeballs that manipulate these markets rotate money. And recently I've been wrong on Apple. I don't like Apple. It's got some really big problems, namely that it can't. There's no great bet that it's going to find the next big thing, which it has to, because it can't be entirely dependent on iPhone revenues forever. All right, so I used to look at Amazon and Apple as kind of the big two and perfect proxies for institutional mindset, but I'm amazed at how they can rotate the money. In this case, I had said, even though I don't like Apple, I'd be a go-along buyer. Instead, Apple is the stock of the day. It's up percentage-wise more than any of the other, what I call lunatic stocks, but it's not pulling anything higher. It's kind of all by itself. And, Amazon is down a bit. So there's sort of chaos from one day to the next about there is no leadership. It's just if we can't get Apple or Amazon going to foment the illusion that all is well, we'll just put it in whatever else. So that's what we've got today.
Is Amazon so big it's in breakup territory? They're now talking about getting into banking and insurance.
Well, I hear that from my stock market savvy buddies all the time, that Trump hates Bezos's guts, and that eventually they're going to come at him with some sort of antitrust action. I don't see that really as Amazon's biggest problem. I think that the biggest problem would be recession, at which point there's going to be there'll be pitchfork riots out on the streets, and they're going to be screaming for Bezos's head, simply because Amazon has control of the retail sales in the U.S. and elsewhere as no other company before it has. So there's going to be there are going to be riots in the street concerning the monopolist vendor Amazon, and that could be where the real trouble comes in. That someone's going to say, let's just regulate them like we would a utility.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Rick Ackerman. Rick, gold, is this the real deal with its increase in action?
It certainly looks pretty good. For me, the sign of a healthy rally is that on the chart, each new upthrust, each few price bars that take gold higher are exceeding a prior peak or two. And this can happen in a little way on the hourly chart. But when you start seeing it on the weekly chart, as we are in gold, it validates the rally. It says that it's good, it's healthy, it's robust, and that it's likely to continue. So, taking it one step at a time, the COMEX April gold contract is currently at 1348.40, and I've got it going to at least 30 points higher. 1378 is the target my subscribers have been using, and eventually 1404. But at that level, it's going to be at a very crucial threshold, just approaching the highs of 2018, which were above 1400. But we're starting to see some of the junior miners perk, and that's a good sign. It just suggests that that the number of believers is growing.
Would you go to a gold ETF or look at individual junior miners?
I'm not big on ETFs. To me, most of them were created simply so that the mechanics who manipulate these markets have options to write against the ETF itself. So the ETFs just kind of dwindle away over time. You take some of the more popular ones, like the ones that measure volatility, and they're programmed to go to zero. And nothing could favor options sellers, premium sellers, more heavily than a vehicle that's more or less programmed to go to zero. So I wouldn't suggest ETFs. You're going to get a more leverage play in some of the stocks. When institutional mindset turns ever so slightly toward gold, they're going to go after some of the bigger stocks where there's liquidity. I would suggest looking at Barrick Gold, which goes under the symbol GOLD. If you're going to do an ETF play in gold, the symbol GLD is not a bad one. But again, I think you're going to get more bang for your buck if you make selective plays in some of the miners that are real. I mean, some of them are pretty well leveraged, mainly because they've been in survival mode for such a long time. They're running pretty lean.
If you were holding on to gold, would a gold certificate be good enough, or would you want the physical product?
Well, among gold bugs, it's part of the lore that we hold on to real gold, and I do have some coins myself, but I think that any gold vehicle, whether paper or physical, will benefit from what looks like a bull market aborting in gold. So I don't see a big distinction. A lot of gold bugs say we're really not holding gold even as an investment. It's just insurance against the things that are difficult to imagine. But I think long before we get to that point, you'd still have options to exchange your paper gold for something real.
We'll have more with Rick Ackerman right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you think U.S.-China trade talks are going anywhere right now, or are we just getting false, encouraging noises?
Well, it reminds me a little bit of the carnival game, where you roll the dice, and the carny guy says, "Oh, look, hey, you made 70 yards on the first, just running back to kickoff there," and you never, no matter how many times you roll the dice and what numbers you roll, you can never get those final 30 yards. So let's just say, a little skeptical.
Is it important to the markets that these trade talks work out?
It has been, but it has been for so long that I think it's definitely a sell the news situation, that whatever results in the way of an agreement with China is going to be less than we might have hoped for, but also somewhat less than has already been discounted in the market, certainly as the markets rally up toward their all-time highs. So yeah, I think we'll get a deal with China, but it will be really interesting to see what kind of deal. But just don't expect it to be too much, and it's not going to be a big plus for the market, although at that point I guess you could say it will cease to be a negative.
Well, going into negotiations, President Trump said NAFTA was the worst deal ever negotiated, and now he says NAFTA 2 is the best deal ever negotiated, and most critics are saying they're essentially the same agreement. Is that what's going to happen with China?
We better do something in the way of a NAFTA with China, because China is already establishing an Asian trading coalition, and it doesn't intend to be very inclusive to the extent of saying, well, Mr. Trump, why don't you come in and join us in this this free or uninhibited trade group. So we have a trade bloc coming into that is gestating right now, and the U.S. in the meantime has been unsuccessful putting its own trade blocs together, most particularly not a trade bloc, but more of a geopolitical one in the Middle East. The idea was to kind of assemble a Middle Eastern NATO, but that's not happening. And for all of his blather about being the deal maker, Trump has some difficult deals ahead to close, and I'm not entirely confident that the U.S. is going to get what it wants.
Rick, thanks a lot for being on the show.
Well, I appreciate your inviting me on, Jim. It's always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Rick or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.